Hello, this is Matt on the Moon Lambo channel. What we're experiencing right now is always what precedes major price bursts for XRP, and it's called accumulation. Lots of chart analysts I follow have been highlighting that exact point as the market has just been ranging for a while now. But the price of XRP cannot and will not stay here forever, fluttering about sideways. Look, I personally do not believe that the price of XRP is going to be this cheap for much longer. I really don't. Because frankly, I do not believe that we're going into a bear market for tons of reasons. And almost all of the chart analysts that I've been following for years and years and years also do not think that we're going into a bear market. It's liquidity, folks. That is the backbone of all of this. It is global liquidity. And not only is it near all-time highs, but it is absolutely increasing, and it's expected to continue increasing for some time. And it's just crazy to me to think that people, with this increased liquidity, money sloshing around everywhere, a chunk of that's not just going to end up in risk-on assets for the first time in history. Like, humans no longer will be interested in taking the excess funds that they now have and putting it into the stock market and into cryptos like XRP. I just don't buy it. I think we're going way higher personally, but before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. As I record this video, it is 11:42 p.m. Central Time, Monday, December 8th, 2025. XRP is $2.05. Bitcoin is just over $90,000. So it's another day of mostly sideways price action, a little down on the 24 hours. So you see a lot of red here. Honestly, it mostly is just sideways price action. You can see on the 24-hour chart here for XRP and for Bitcoin. Nothing crazy going on here, but we're not entering a bear market. I just don't buy it. I will eat my words, if I have to, but I can only say what I genuinely believe to be true, and I don't see good arguments, no good macro arguments, indicating that we should be confident we're entering a bear market. But still, we get headlines like this, and this is from the end of November, but I'm not going to read the article, I just want to make a point here. But this one was titled, it's from the Motley Fool, "Was 2025 actually a bear market for crypto?" Here's what the data says. Okay. I've seen a couple people argue that this year has been a bear market, which is kind of crazy to think because you saw Bitcoin like a month and a half ago, or I guess it's actually been it's been 2 months now, because it was like the beginning part of October, I think. Bitcoin hit $126,000. That doesn't sound like a bear market to me. You saw XRP hit a new all-time high of $3.65. Yeah, I know it's not like a crazy full-on breakout like we want to see. I still think that's coming personally. But does that happen in a bear market? I just think it's a lot of sideways price action in the market. It looks just fine to me, but it always comes down to how you define what a bear market actually is, and that's the reason a lot of this disagreement comes in. People don't agree on what an actual bear market is. But I will say this: if Raoul Pal and the rest of them that are saying, "Hey, the reason that we haven't seen the euphoric blow off top for crypto, the reason we haven't seen that yet is because there's been a change in debt refinancing, which changed global liquidity flows, and now it's extended, and it's going to extend into 2026, maybe mid to late 2026. If he's right and all the other analysts that I follow are right who have been propagating that idea, I really don't believe that a lot of these bears that have been insisting that we're in a bear market now, I don't think they're going to admit they're wrong. They're just going to say it was a bear market, but it was a shallow bear market. Of course I was right. Even though this whole time there's all this evidence pointing to, no, stupid, it's global liquidity. And so you're going to see a bunch more headlines in this same vein. I think if Raoul Pal ends up being proven correct as time passes, if we really do see that blow off top, that moving in tandem as you would expect it to, because mind you, crypto's moved in tandem with global M2 for almost 17 years now. So if it's really going to keep going to the upside, and in a crucial moment, Bitcoin for a prolonged period of time, we're just for the next year, because you understand, like bear markets, they typically last like a year, right? That would be normal. So while global liquidity is doing that, it's going to the upside, we're to expect that for the next year, roughly, that Bitcoin and the crypto asset class is going to move to the downside. Okay. I think that people are just going to redefine what bear market is and just going to say, see, I was right. We're just in a new cycle and it just moved up real fast now. That's what they're going to say. It's going to be ridiculous. But the evidence just doesn't point to us being in a bear market, which is why I'm optimistic for XRP and all the rest of the altcoins that I hold. Bitcoin leads the way, though. which is fine. That's why I track it, even though I'm not particularly excited about Bitcoin. It doesn't get me all hot and bothered, you know. But take a look at this post from on-chain analytics firm Santiment. This is a good sign, I'd say. Look at this. Bitcoin supply on exchanges has reduced by a net of 403,000 Bitcoin in the past year. Look at this. That's the title of the chart. Here's what they wrote. As Bitcoin's market value hovers around $90,000, crypto's top market cap continues to see its supply moving away from exchanges. Over the past year, there's been a net total of 403,200 Bitcoin moving off exchanges, a net reduction of 2.09% of Bitcoin's entire supply moving off exchanges. Thumbs up emoji. In general, this is a positive long-term sign. The less coins exist on exchanges, the less likely we've historically seen a major sell-off that causes downside pressure for an asset's price. Yes, and folks, that makes logical sense. Because if people were thinking they're going to or may be selling anytime soon, they're not going to waste time putting their Bitcoin in cold storage, especially not with how slow that son of a bitch is. Bitcoin, that clunky piece of shit, it is slow as fuck. I'm telling you, people, if they were itching to sell their pet rock of crypto, aka Bitcoin, if they were itching to do that, they wouldn't waste it, especially not with those high Bitcoin transaction fees relative to XRP or anything that's relatively modern. They wouldn't do it. They would absolutely just keep that piece of crap on on the exchange. But they're pulling it off. So they have no intention of doing that. Here's a post from Bitcoin Vector. This account is run by the folks at Swissblock, on-chain analytics firm. And they wrote the following. And this is fun because it's Bitcoin and the Russell 2000. You got Bitcoin on top, Russell 2000 on bottom, and this is going back to the beginning of 2020. And they wrote, last time this setup appeared, Bitcoin delivered over 390% upside. This time the structure is different. But we're starting from an environment that precedes liquidity expansion. And when liquidity turns, risk assets take the lead. And so there is another entity here, in this case an on-chain analytics firm, which is absolutely banking on liquidity turning up. And I mean, you get the implication here, right? Bitcoin and, of course, risk on assets, Russell 2000, that small cap stocks, moving higher. Because as there is increased liquidity, that typically, I mean, I'm not saying it's the only factor, but it's a major factor. As there's more liquidity sloshing around, unless people are absolutely petrified for some additional reason, but outside of something wacky like that, if there's money sloshing around, they're going to have an increased appetite for risk, which means they're going to go further out the risk curve and not just invest in the S&P 500, not just into large caps, but they're going to go out into the small caps, which are perceived as more risky. And when there's that type of environment, humans are also going to be more likely to throw money into the crypto asset class, which is more risky. It's just what happens here. And so they're acknowledging, again, they wrote, when liquidity turns, risk assets take the lead. Well, that is exactly correct. And look at how this lines up. And it's going back the last half a decade. It's just, you do see it, right? If you have one functioning eyeball and you're a human, you can comprehend exactly what they're conveying here. It just doesn't make sense to think that we're in a bear market right now. And it's always the chart guys that don't analyze macro that will tell you we're in a bear market. They'll just look at it, they'll see various indicators from the past, and they're not even wrong about them. I'm not saying they're lying or wrong about that, but they will ignore the rest of reality. Like, don't ignore that. How about that rest of reality you're ignoring? Pay attention to it. Damn it, pay attention to it. That's what I say. Use all of the pieces of the puzzle to complete the puzzle. Otherwise, you cannot complete it. I'm just saying, man. That's how puzzles work. Here's a post from Swissblock. Bitcoin, what's the plan? Momentum reset again after its first positive spark, slipping back into full negative territory. That's usually the phase before bottoms form. Reclaiming the yearly open at $93,500 is the trigger. Okay, so we're a little below it. They're optimistic that we're either at or near the bottom, and they're just citing a level that needs to be hit before you ultimately surge higher. But they are not bearish in the least, and that's based on data, that's based on historic precedent. Just saying, man. Here's a post from Negan Tropic. This is an account run by the co-founders of on-chain analytics firm Glassnode. And they wrote the following. Ethereum is quietly setting up for something big. Dominance reclaiming the 50 SMA, trend break behind it, momentum pressing higher. The last two times the structure appeared, it didn't drift, it accelerated. The bearish window on Ethereum and alts is gone. Ooh, well, you love to hear that. So first of all, historically, when ETH really takes off, and I don't know if this is the actual moment, but at least there's some optimism. And by the way, the reason I want to highlight this, actually, I've seen tons of posts from analysts that I follow saying Ethereum's looking primed right now. And I've only shown a few examples on my channel because I don't want to beat a dead horse here. It's not an Ethereum channel on top of that. But that's good, even if you don't hold Ethereum, because historically when Ethereum really goes, that's when alts start to go completely insane. And so when he's saying here the bearish window on Ethereum and alts is gone, well, I hope that's precise. I hope that's absolutely accurate. Here's a post from Crypto Insight UK, just from this morning. XRP back at key support. This year, this area of price has been the best area to accumulate. Chart looks good to me still. And so you can see what he's highlighting, this particular range in here. And frankly, it's basically, I'll just say roughly anywhere from about $2 to maybe a little over $3, somewhere around there. Like that's basically been the accumulation range that we've been in throughout 2025. Anywhere in there, people are going to look back and be like, yeah, that was a good zone to buy. And I know it feels like and it is like mathematically a huge percentage differences from, if you're talking about going from $3 to $2 or even from $2 back up to $3, I get it, big percentage differences. But, if we're right about XRP and it's going to persist way into the future, a decade out, 2 decades out, if XRP is, like worth closer to $100 at some point in the future, and it's regularly changing by like $5 or $10, like in a day or 2 or 3 or whatever it ends up being, like, nitpicking over whether you're buying at XRP at $2 or $3, it's not going to matter. So it feels extreme to us in the moment, and it actually is. I'm just saying in the future, if we're right about XRP and it's going to persist, and I'm very confident, frankly, that it's going to persist, I think it's already won, then this is going to look like nothing. And think about it, there are people that bought XRP after it surged to 6 cents. It went from half a penny to 6 cents. Do you know what happened after it ran to 6 cents? It fell back to half a penny. And you would have, because that was a 12-fold increase, mind you. So if that, you would have felt like such a dummy. You put all your money, your hard-earned money into it at 6 cents and then just craters down back to where it was before. You might have felt like a fool or felt very stressed out about that. I'm sure people were. But looking back on that with the benefit of hindsight, would you not love to have the opportunity to purchase XRP at 6 cents? I mean, you're not stupid, so obviously the answer is yes, because it's worth over $2 right now. I'm just, that's why I say it's all relative. The people that win in crypto are the people that purchase and they just wait. If you have your conviction, then you just wait. That's it. You do nothing. Despite crazy volatility, yes, that is the answer. And I understand it feels hard to people. And you want to try and game the system, and you want to time the market, and you're like, oh, but it's probably going to go lower, so I could sell that one, then I could buy lower. Okay, well, you do you, girl, but I ain't playing that game. I don't think I'm smarter than all that. I don't. And so to prevent catastrophic failure, I do nothing. It's an unsexy strategy when it comes to investing, but it freaking works. Here's a post from Ether National. He's delivering effectively the same message. He wrote, XRP is still there, and he's highlighting what he's calling a re-accumulation range. It's exactly what it's talking about. XRP from roughly $2 to a little over $3. That's just where it's been throughout 2025. And it is cool that we got to see multiple new all-time highs for XRP. Don't get me wrong. I'm having fun with that, just like the rest of you. But the real fun comes when we finally hit the face melting season, which I still firmly believe is going to come at some point. I just don't pretend to know when. But it's so cool to see that the new norm for XRP is no longer, 20 to 30 cents. It's more like $2 to $3. That is a new realm. Like, we're on a different planet now, even with that. Like, that is a whole different world, man. So many people said that this would never happen. They were wrong, obviously, and here we are. I think it's only going to get better in terms of the trend. It doesn't mean you can't go lower in the short term, but if you let enough time pass, I still believe the chart just keeps going up and to the right. Here's a post from Chart Nerd. Same concept here. I told you guys, like, I keep seeing this from analysts. They're just kind of, and I think it's a good time to deliver this message. Guys, this is what precedes major moves. It's called accumulation. Welcome to investing. I think at a time where we've seen so much sideways price action after a lot of fear, I think this is the right time to remind people of that. Yeah, so I'm glad they're doing it. Same story here, folks. XRP a little above $2 to, you can argue, a little over $3. It's just accumulation. That's all this is. and he thinks it's going to break out, and he's still calling for a peak of $27 per XRP this market cycle. So I don't know if he's right. I don't make price predictions myself. I admit I don't know where the price of XRP is going. I flatly don't. I'm like the rest of you guys. Like, I'm just here because I have the same conviction like you guys do. Like, we're right about this. We did find something special. My attitude is just, okay, I don't know when it's going to go for sure, but I do know I'm going to be here when it happens, because I am stubborn AF, folks. I will not sell unless it's because the price is way, way, way higher. I have to be sufficiently enticed, and then sure. But yeah, these guys are right about this. The concept, and this is what's happening. It's just accumulation. And it makes you feel like you're doing something wrong. It makes you feel impatient. It makes me think back to like August, September, October range in 2020, a little over half a decade ago. I just felt like XRP was never going to move. It was hovering between like mostly around 25 cents probably. I'm pulling from memory, but I think it was about that 20 to 30 cent range, call it. It just wouldn't freaking go. It just month after month after month. It just stayed there until suddenly it didn't. Then you wake up one day and it's actually going. Well, welcome to ranging. Welcome to accumulation. And if this cycle's elongated, as so many analysts are calling for, like Raoul Paul, well, then yeah, it's just going to try you that much harder. But it doesn't mean the future isn't coming. It doesn't mean that price is going to stay here forever. Of course, it's not. And so as far as I'm concerned, this is a binary bet. Either we're wrong and XRP goes to zero, or we are right, and one day it's worth a fortune compared to what it's worth right now. I'm still making that bet. That's what I believed in 2017. Here we are in 2025. I'm saying the same thing because it still makes logical sense, and directionally we're going the right way, and the fundamentals for XRP have never been stronger, period. Here's a post from chart analyst Ali Martinez, XRP. It says XRP is set up for a 16% move once it breaks out of this triangle, so he's optimistic that in the relative short term, actually, perhaps this month, you could see a noticeable surge. Maybe this will be one of those days you wake up and it's actually up a good bit, 16%. I know it's not a new all-time high, but I'd certainly welcome that. So if you're curious about the short term, what he thinks might be probable, that's one take on it. Chart analyst Dark Defender is certainly very optimistic as well. He shared this XRP chart and wrote, "The resistance since July is ready for a test and break." And you can see he slapped down this fractal here, showing XRP ultimately, in the relative short term actually, breaking up to $5.85. So nobody can consistently predict time, but if that's roughly what's going to play out, that's going to make a lot of people ridiculously wealthy. And it doesn't mean it has to stop there. Actually, he's made it clear in separate posts that he actually thinks XRP is likely to peak closer to like $18 actually, I probably shouldn't even say peak. I've just seen him chart at least $18. Here's a post from Cointelegraph, our article. And it's so fascinating every time to see this because they've just been so awful towards XRP because they have just irrational bias against it. But here even they are talking about in the short term, at least the potential for a move to the upside. And so they wrote the following, even Cointelegraph. They wrote, and this is the subheading, XRP symmetrical triangle breakout targets $2.65. Data from Cointelegraph Markets Pro and TradingView shows XRP trading above a symmetrical triangle in the 4-hour time frame, as shown in the chart below. The price needs to close above the upper trend line of the triangle at $2.15 to continue the upward trajectory, with a measured target of $2.65. Such a move would bring the total gains to 27% from the current level. A symmetrical triangle on the 1-hour chart shows XRP coiling tightly, said pseudonymous trader BD in a X post on Monday. Adding, a breakout here could trigger a move of up to 16%, pushing the price toward the $2.40 zone. So that's interesting. Another analyst talking about the same percentage. So, take for what it's worth here, I just think it makes sense to be a bull here and not a bear. It doesn't mean we can't go lower in the short term. That's possible, and I've been highlighting that quite a bit recently. If you've been following my videos where I talk about market activity, I've been very, very clear over a span of many days that is at least a decent possibility. Many analysts I follow are warning it's possible, but it's not that they're predicting that as the most likely thing. It's more like a coin toss. That's the vibe I'm getting from analysts that I follow. It's like, hey, in the short term, and that's fine. Sometimes the data in the charts isn't strong enough to have a bias towards up or down. Sometimes it's like, it's looking a little fishy here. I don't know. I'm getting a little squeamish. That's fine. If that's the answer, that's the answer. And that's what I'm seeing from tons of analysts here. So if we break down, we do. But either way, on the higher time frame, which is what matters, nothing is broken. And liquidity points toward us going higher into 2026. Like, if history is to rhyme with itself anyway. Nobody knows for sure what's going to happen. But if liquidity no longer matters, if the backbone of all this is no longer the backbone, then what is? What's the new backbone? Why was the backbone replaced? What is it? If the backbone no longer matters, I don't know why not. I know it doesn't follow perfectly down to the second, the minute, the day, the week, the month, the quarter necessarily. But if you zoom out over a span of 17 freaking years, yeah, you can see that not only is there correlation, I argue strongly that it's causal. There is not just correlation, but there's cause for that correlation from liquidity, yes. And it doesn't perfectly. So if you zoom in on a chart, you can find segments where it doesn't line up. That doesn't matter. It just doesn't matter. Zoom out on a chart. It's very clearly there. There's no rational reason that the link would just now break. And that's why I keep going back to all these chart analysts that are screaming we're bearish. How come you don't have a macro thesis that backs that up? If all you're going to do is point at various things that happened in previous market cycles that only happened when we were in a bear market, do you really expect me to find that sufficiently compelling? Give me a macro thesis in conjunction with your chart stuff, which can be used as supplemental evidence. Yes, supplemental evidence, totally fine. I'm not arguing that you're wrong about the facts that you're bringing. I'm saying bring a freaking macro thesis or I just am not going to be swayed by you. It's just not going to happen because charts are downstream from macro and they always will be. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!